Okay, let's look at these corrective phases. If you guys have got this far and followed me, we've gone through 1, 2, 3, 4, 5, 6, 7, 20% plus pullbacks. And you can't remember those. You might remember the last summer one because that was pretty miserable, but that's it. We deal with this. The volatility is a feature, not a bug. You need the volatility to drive these massive rips when they come. So that's where we are. We've seen this. We should be somewhere close to bottoming. Now, with those 7 pullbacks, we've still had 600% returns from the low. Again, you've forgotten about those because you're like, oh my God, it got to 110 and now it's at 80. It's like, it's all fucking noise, kids. Really, honestly.
Raoul Pal, in this flash update, dissects the current market environment, characterized by Bitcoin's retesting of the $80,000 level and pullbacks in tech stocks. He draws insights from his global macro investor report to explain the present volatility and the US dollar's impact on markets. Pal offers a framework for investors to understand these dynamics and potentially position themselves for future opportunities. Pal emphasizes that the recent market turbulence should not be unexpected. He attributes it to several factors. Before we delve into the video, if you want the latest crypto news, market updates, and expert insights from the top minds in the industry, be sure to hit that subscribe button and turn on notifications. Stay informed, stay ahead, and never miss an opportunity in this ever-changing world of the financial market. Thank you for subscribing to our channel. Let's watch Raoul Pal's urgent market update.
Okay, let's look at these corrective phases. If you guys have got this far and followed me, we've gone through 1, 2, 3, 4, 5, 6, 7, 20% plus pullbacks. And you can't remember those. You might remember the last summer one because that was pretty miserable, but that's it. We deal with this. The volatility is a feature, not a bug. You need the volatility to drive these massive rips when they come. So that's where we are. We've seen this. We should be somewhere close to bottoming. Now, with those 7 pullbacks, we've still had 600% returns from the low. Again, you've forgotten about those because you're like, oh my God, it got to 110 and now it's at 80. It's like, it's all fucking noise, kids. Really, honestly. When we go back to 2017, it was more violent because Bitcoin was earlier in its adoption phase and we had 1, 2, 3, 4, 5, 30% plus pullbacks, some of them at 40%. So this is more like Solana now, which is more volatile because it's earlier in the cycle. It's more like Ethereum, it's more like others. So this gives you the contextualization of what you're going to have to stomach to make the money. To unfuck your future, you're going to have to learn to deal with volatility. And if you've got any spare income and you can invest, you can buy some of these dips, but be careful later in the cycle. You don't want to overextend when you should be thinking about how do I take money off, but we're far too early for that yet. I talked about we could take lifestyle chips off sometime in the first quarter. Looks like it's pushed out to the second quarter. I'll keep you updated when that happens. But again, I'm very chill about this. When you zoom out, Bitcoin is just retesting where it broke out from. That's it, guys. It's hardly a big deal. When we look at the RSI of Bitcoin, it's like the second most oversold it's been in this entire cycle. These are opportunities. When it gets this oversold, yes, it can chop around a bit at those lows, might even make a new low, might chop, rally, new low, which will then diverge on the RSI. But it's telling you 1 month from now, prices will start climbing for sure. They'll be higher than here. And then 2 months, 3 months, 4 months, we should have much higher prices. So once we've got the corrections out of the way, you start to look forward to, okay, now I can get some real price action going again. So that's to come. When we look at Solana, everyone's like, oh my God, Solana, look at the price. It's just gone back into the range. So we had the kind of the meme mania peak. Then we've taken off the memes. Solana got the most oversold it's been, I think, pretty much since the FTX days. It's oversold versus Global M2. It should be fine going forwards. It's a very clean market. There will be plenty of on-chain activity in Solana as we go forwards. It's a broad, deep, rich ecosystem. So nothing to worry about. And I think many of the memes, or a few of the memes, will be Phoenix that rise from the ashes. We will see some great recoveries in some of that stuff too. But remember, that's only for 10% of our portfolio. The risky stuff is 10%. Solana is a core position for most people, and that's a good one. The core positions that I talk about for most people will vary depending on your case. But, I've always used Bitcoin, Solana, Ethereum, and I use SUI as a higher beta bet because I think that's going to do well this cycle. Again, you may choose different names. You may have XRP, you may have something else. That's fine. You do you, I'll do me. Let's just wish each other the best, because that's all we want to do. We want everybody to do well out of this. If this is going to go from $3 trillion as a market cap to $100 trillion, we want everybody to make as much money as possible, and we can fuck it to the banking system and everybody else. We deserve this. This is our system. It's made for us, and it's ours to capture. Help each other out is the key thing, and not fight with each other. Fear and greed. Everyone's fearful as shit right now. It collapsed down to 20, so super fearful. Again, these tend to be good inflection points to start thinking about absorbing. We're seeing exactly the same in equities, funnily enough. The NASDAQ, we've suddenly gone to this massive bearish sentiment. 80% of all surveys are bears. Those tend to lead to almost V-shaped recoveries. So now, can we have another, one or two sharp sell-offs around these levels? Possibly. But basically, it's telling us everyone's got way too bearish, worrying about global growth. They're not seeing that was something that happened last year, and the forward-looking indicators are doing the opposite. So, your Tesla stock, your Coinbase stock, all of these things that you own, they should be fine going forwards. We've just had a growth scare driven by the dollar and driven by financial conditions. That has passed. The dollar is weakening and rates are coming lower. So when I put my DMARC indicators on top, which are my favored technical analysis indicators, we're at day 6 of a 9 count. So it tells us probably in the next 3 days, this will all be done. Is the low in already? I think it probably is. But could we kind of bounce, have another stab at the low, whatever? Day 9, that would be fine. For the NASDAQ, because it's not open on weekends, it looks like it's kind of Wednesday that it does it. Almost everything has the same set of indicators right now. So it's because it's all driven by the same thing. So it tells us that all of this stuff that's making everyone nervous should be over by the by the middle of next week. And then we can go to the healing phase. And then again, we can start rising. The healing phase, who knows? Could be 2 weeks, could be a month. But the back end of March, we should start to see prices accelerate. And then April, May, June, we should see some really significant price action as the second phase of the banana zone kicks in. These phases of the banana zone, I get so fed up with people online going, where's my banana? Your banana fell over. Your banana's not ripe. Your banana, blah, blah. The banana zone is a period of time that lasts a year. It is not an instant gratification. You guys need patience more than anything else and need to understand markets. So we had the start of the banana zone. We are now in correction phase 1. That happens each and every time. Look at 2017. It's almost identical. Then, as we go into March, April, May, we start accelerating up again into the next phase of the banana zone. And then we'll have another correction, and you'll be going, oh my God, it's all over. Am I going to die? Have we screwed this up? Where's your banana? Again, you'll have forgotten everything that went before it, and you'll be gripped with fear all over again. Then we have the final top into the end of the cycle. My view is that the business cycle is taking a long time below 50. It's starting to expand now. That has probably extended the cycle into 2026. Not a guarantee, not yet a prediction, but is what is in my head because of the structure of the business cycle. So we can probably keep going longer, and that will still give us much higher prices to come. So the game is all to play for. It is a game of don't fuck this up. It is a game of understanding the rules, understanding to have patience, and stepping back, zooming out, touching grass, touching sand, and let it play out. All of our futures are resting on the same thing. I take this very seriously. I'm doing my absolute best, along with Julian, to guide you in this.
Raoul Pal's analysis suggests a nuanced approach to the current market. While volatility is present, he sees it as a natural part of the cycle. By understanding the key drivers, monitoring relevant indicators, and maintaining a long-term perspective, investors can navigate the turbulence and potentially capitalize on emerging opportunities in the crypto and broader financial markets.